looking at it now, signing my statements. That's a big deal. That did not happen for years. And that's why I'd rather invest there, because that's going to become more and more and more important as regulation comes. Many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, almost a decade ago, from $800 all the way to 60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. Now, what happens, and this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto's the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months. In the contagion of leverage being caught offside with the lack of liquidity. Voyager is not that big a deal. It's kind of irrelevant in terms of, this is a diversified shareholder base. It's not FDIC insured in any way, so it's not putting any stress on the government systems in any way here. But the great news about this and why this is so good for the market and how this helps the crypto market is it educates the business models that aren't going to work. So it's like taking a big spatula from the sky and scraping all the crap out of the market. And it's going to happen very, very quickly. So anything that was built on, a business model that is not going to work or can't sustain volatility is going to be gone. And it's a good thing. It's a wonderful thing. It's going to leave the industry much stronger. Yes, we must mourn the investors that got wiped out to zero, but even they are better off in the sense that they've been educated. You own crypto without leverage, and you understand your counterparty risk. Don't worry, by the time all the litigation is over from all these bankruptcies, you'll know everything about everybody. Lawyers are really good at doing that, and there'll be tons of class action, if not just straight on litigation, to go after any assets they can get. And that is sort of, when a fish dies in the ocean, it goes to the bottom, and that protein is reprocessed by slugs. And I'm not saying lawyers are slugs. They have more than single cell proteins, but they know how to get the last drop of any value there, and they're going to get it. It's going to take 5 to 7 years, but all of this is good. So when I hold crypto, and I know it's very volatile, I have zero leverage in any of my positions, because I know tomorrow morning I could wake up down 38% in any token, any coin, any project. And really, that's exactly what's happened. So, but if you put on leverage, you learn the very, very important lesson. You go to zero. People think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen. The most likely scenario, and this is a personal opinion, but one I've been working on in Washington, along with others, is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stablecoin. Now, the proposed policy that you'll find, this is very simple policy. What it looks as, it says, okay, for any stablecoin, an audit every 30 days. And any asset underlying, holding up the value of the coin or token, cannot have a duration of more than 12 months. Now, you've seen that policy before. It's called a money market fund, and you'll find it at Fidelity and Putnam and many other financial services entities that are FDIC insured. Circle, if it wished, that issues USDC, could become a bank They could be FDIC insured if they wanted to, but they are sort of leading the pack with crypto in terms of payment systems under a stable coin that has not broken a buck. So you've seen even Tether trades below $1. It's 0.999 right now. And so when you break a buck, you lose a lot of confidence. So what I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill and has lots of support from both sides of the aisle. So I think that's good. Now, obviously, what happened to Luna is an example of what not to do. So again, a sad situation, billions lost, but a great education. So at the end of the day, the bad ideas get, removed by the big spatula. And again, it's unfortunate for those investors that didn't think it through, but not all stable coins are alike, USDC being the leader currently. Now, having said that, if you go look at current yields across the spectrum of duration from 1 month to 12 months, it's only 50 basis points right now. So right now, USDC, while it hasn't broken $1, is not a great place to park cash because you can do 1.2% in commercial money market accounts in US dollars. So at any one time, you have to manage assets as you always had to. I think USDC, when things stabilize and there's more demand for it, will probably have rates 300 basis points higher than 1%, but you just don't know. And when you were putting out loans on USDC platform, it would have been best to ladder them from 1 month to 12, so you'd still be accruing 3 to 4%. But everybody's learning. That's my whole point. That was a long dissertation about what I think is going to happen in stable coins. But if you're going to be in a stable coin, it's only a personal opinion, USDC is the one that has not broken a buck recently. It's impossible to know, where the bottom is. But I would say this, I don't believe we've seen the bottom yet, and I have a different view of it. I go back again to other asset classes that I've invested in for decades. In every case, traditional bonds, traditional equities, real estate, alternative asset classes, bottoms are reached with an event, a panic event, as I call it. And you can find it in every asset class. Back in the hedge fund days when they started gating, these large multi-billion-dollar hedge funds that gated, shut down their liquidity, caused panic, and you saw bottoms in equities as they were being liquidated. There's long-term was one of the classics in the last couple of decades. And it was a fund that was over-levered and blew up. We haven't seen that yet in crypto land. There's no big guy has gone to zero yet, and I think that's still to come. Hard to say who it is because it's going to be because of leverage and some kind of relationship in a counterparty holding that they have not disclosed. And I'm just speculating right now, but that would be very healthy for the market to have that happen. But I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. I have no idea who's next. Could be tomorrow morning, could be a month from now, but it's coming to a theater near you. And it will definitely be a very good thing for this industry. It'll be a great thing because it'll take out all of the bad, broken business models, the heavy leverage, the speculation that was too risky, and push everybody, and this kind of circles back to the conversation you were having with Ben at WonderFi. The reason I'm an investor in WonderFi is I need a place to store my crypto assets that fit into my compliance and accounting departments. And so, when WonderFi was able to offer me a centralized wallet at BitBuy, I was able to say to my auditors, look, you can audit this thing daily, weekly, quarterly, monthly, and I can mark to market each position for you at 4 o'clock, even though it's irrelevant in crypto land. It trades 24/7. But the old infrastructure of compliance that exists for all financial markets has not yet provided systems yet. It's taken me a long time to convince my existing compliance and accounting infrastructure that supports my operating company's investments across a wide range of financial services, to get on board with my positions in crypto. Because remember, I own WonderFi because I want to own infrastructure equity. Same for FTX, same for Circle. I'm a shareholder of those companies, and Immutable Holdings in the NFT space. That's my basket of equities that are all compliant operations. They're all compliant. They all work under very strict compliance. That's the test that starts the equity investment. But the more interesting challenge that I solved recently with WonderFi again, with BitBuy, was to actually open an account, transfer all of my projects, whether it was a Polygon or Helium or whatever. I mean, all this stuff to me, these are not coins, it's just software. That's all it is. And moved it into, and slowly I'm doing this, I'm not finished yet, into BitBuy, where I can get a statement each month that my auditor gets before I do, and my compliance department marks to market every day at 4 o'clock. But they mark to market it because they have this giant infrastructure that reports back up, is there over leveraged positions, is the position more than 5%, depending on the mandate that it's held in. But this is what WonderFi is doing. It's working under the regulator, under an order, completely compliant, actually has a public auditor looking at it now, signing my statements. That's a big deal. That did not happen for years, and that's why I'd rather invest there, because that's going to become more and more and more important as regulation comes. The large institutions that don't own any crypto need the WonderFis of the world, totally compliant, whether it's decentralized or centralized, and auditors that can actually use the infrastructure they're building to make sure they can mark to market according to the traditional rules of compliance. I think crypto has a very bright future. I'll be bold enough to say in this very volatile market for crypto that within a decade, it'll be the 12th sector of the S&P. And the reason is there's just too much productivity, too much transparency, really strong vehicles for solving financial services problems that exist today, like transferring capital, as I talked about earlier. It's just too good and too efficient. And so it'll remain. The key is we need to get some policy. I think it'll happen first with stable coins. And you asked the question about the stock market. It's no different than the crypto market. The stock market is still a little expensive if you believe we're having a recession, probably fairly valued if you think we're having a soft landing. The trouble is nobody knows. So you're going to see this fibrillation going back and forth until we resolve that question and we know where the Fed stands in further rate hikes. But there are some great companies that have lost 20, 30, 40% of their value. And I have to admit, I'm nibbling in equities as well, just as I am in crypto. And so I can't call the bottom, but I don't use leverage. That's the secret sauce. Everybody's calling me up, want to lend me money. And I just say, no, nanette.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.